Hi, everyone. Our panel today is about unlocking Bitcoin debts and how Layer 2s can actually make them actually have utility and actually yield generation and stuff. Currently, I think everybody knows that Bitcoin debts are not performing well. Many are trading below MNAV, and we're trying to figure out how we can unlock the actual potential of debts. For those of you who don't know me, I'm Rena. I'm with Stacks. I run our foundation and most of the treasury management. And today, for my panelists, I have Muneeb, founder of Stacks, and Matt, founder of Hivemind Capital. All right, so kind of to set the stage for where we're going, Bitcoin is moving beyond the storage, store of value play. We're thinking about Bitcoin privacy, Bitcoin DeFi, and how do we unlock that? Now, in this cycle, everything has been about investing in public vehicles, whether it be SPACs or PIPEs, to actually bring Bitcoin capital to retail and institutional investors. To date, right now, we are at about 200 public treasury codes for Bitcoin, about 60 to 75 billion raised to buy Bitcoin. I think maybe to start this off, what I would like to kind of kick off with is, Muneeb, you are the resident Bitcoin guy for 15 years plus. Matt, you are now branded as the DAT guy. How do you think that Bitcoin DATs compare to ETFs or just buying spot Bitcoin?
Yeah, hello everyone. I don't know whether being the DAT guy is a good thing or bad thing in this market.
Hey,
but
you're better.
I take it as a compliment. But I've known Muneeb, obviously, and being a supporter for the Stacks ecosystem for I don't know how long, very long. And I think that is an interesting instrument, right? Because if you really think about how it all came about, obviously you have Saylor and Strategy started it. But for a very long period of time, there was just one DAT out there. That's why the DAT is not even a name, because there's just only one. It's called MicroStrategy. But since late last year, I would say since legislation change, you're seeing a wave of financial innovations. And I think that is the output of that, not the input of that. So I would take a big step back and say, forget about the price actions early this year, how good it was, how bad today may be, and how weak you think it is. I think let's just all take a step back and recognizing the US landscape has taken such a big change that actually more than anybody realized, right? I think people are still settling in to say, well, not only the regulators are no longer there to enforce, but actually are encouraging people to try different new ways to bring digital assets and crypto into the mainstream. And this mushrooming of that, obviously we can talk about technical side, the structural side, but the ability to allow this happen, I mean, you couldn't imagine that even 15, 16 months ago. I would also say that, for that to add value, it cannot be just another way of ETF, right? You're already having so many BTC ETFs, they're actually a low-fee, passive vehicle. So if you actually want to launch something on that, which by definition will have a higher fee structure than most of the ETF, the BTC needs to be more than just a store of value. It has to be able to do more things, which is the reason why I think I'm very excited today to chatting with Muneeb about it, because if you think about what Stacks is trying to do, the ethos, and I don't want to put words in his mouth, is always been trying to unlocking the dormant capital on BTC. So BTC is no longer just a pure store of value that does not do much. Be able to give the BTC the layer of smart contract, having it be yield generating, be able to build business on top of it, actually is always been the vision for Stacks. Now you have the debt on top of this. I would think it's making even more sense, because you can now do this in the public market in a scalable way, bring billions of capitals coming in. So actually excited to hear Muneeb's thoughts about not only Stacks would be able to unlock an entire BTC ecosystem, but how would actually accelerating that in the name of this DAT movement, I guess.
Yeah, so I think this is, first of all, agree with Matt and how DATs are a pretty interesting structure for exposing some of the capital that's actually in areas that it finds its way hard to sort of like access digital assets. So I think ETFs can also play that role, but with the DAT and with the DATs, you have this almost like operating layer on top where different different managers and different operators are actually going to use the capital in different ways. And I think that could be very, very interesting. For me, the most interesting aspect of this is that it's actually creating very interesting market pressure for people who are holding BTC on their balance sheets, because earlier they could just sort of like get away with passively holding Bitcoin on the balance sheet and not really doing anything with it. But now you're seeing other digital assets like Ethereum, Solana entering the marketplace through DATs as well. And these assets have base yield from consensus. And these ecosystems are much more used to deploying this capital on chain, right? Which is I think we've seen this almost like a divide in our industry between the Bitcoin community and the rest of crypto, where the rest of crypto is like much more on chain. You see a lot of developer activity. You see a lot of excitement around building these on-chain applications. And in some ways, Bitcoin has been lagging there. Saks and a few other projects aside, we are sort of like the flag bearers for, no, we want to create a Bitcoin on-chain economy. And interestingly, this thing is now coming to play on NASDAQ and New York Stock Exchange. Because before this, there wasn't a lot of like market forces that would actually force someone that you now need to go and figure out how to do better than just passively holding Bitcoin. Because your competitors are able to get like 4 or 5% yield on consensus, and then they're able to go and deploy this capital in much more efficient ways. And I think this is going to create a very interesting market dynamic for Bitcoin treasury companies.
Where do you think the hurdle will be, like the mental hurdle of, we have a lot of Bitcoin kind of all across the ecosystems, and only 1.5% is already in DeFi now. How will a DAT actually solve that?
So I think the first thing is that there is information asymmetry. Like a lot of the treasury companies, even though they're feeling the market pressure, like imagine that you're holding, let's say, $500 million in Bitcoin, and you're trading below FNAV. So the market is actually pricing you below the value of your assets. And there's a lot of market pressure on you to go and somehow figure out a strategy. And you're looking around and your first thought is, well, I'm sitting on a lot of capital. How can I deploy it? How can I use it? But their first instinct is there's so much like sort of like information asymmetry between the broader Bitcoin community and the on-chain Bitcoin developers like people in Stacks, that a lot of people are not even familiar with the fact that they can actually come and get on-chain yield. So their first reaction is they're going to CeFi players, they're going to hedge funds, they're trying to do basis trades, and which comes with its own like pros and cons. So the most obvious thing for me is I think this is a moment for market education. This is a time for, in many ways, L2s like Stacks and others to shine and to give a solution for the pain point that all of these people are feeling right now.
I agree. I think if you think about where the industry is at, right? Let's not forget about that. The BTC ETF is only less than 2 years old. I mean, in the grand scheme of things, it's actually a very recent development. But I think in that 18 to 20 months, we already came such a long way. And I think there are so many institutional investors that doesn't even know what BTC was 3 years ago, got comfortable actually buying the first BTC via the ETF, now probably sitting on a lot of paper gains internally and looking like a hero in their investment committee, obviously asking themselves the right question is, what can I do more with my BTC? And if you think about earlier this year, including Hivemind, right? Like all we're thinking about is there are so many passive BTC holders, and BTC is not a yielding product. How would you actually unlocking that semi-active product for the institutional investors that they actually will be able to getting some sort of yield? If you think about Coinbase asset management, they actually launched a BTC yield product early this year. I think everybody is thinking about, okay, there are now tens of billions in the BTC ETF. Even 10% of them would want to seek active yield. That's actually a lot of activities for you to unlock. Now the triage, which Muneeb mentioned, is do you go to a CeFi providers to get a yield, via selling call options or doing perps and many other ways, or do you trust the smart contract layer and doing this in a programmable way. I think in the end, it's a positive sum game. It's not a zero-sum game. I think you're always going to have people more comfortable with one than the other. But I think they're both going to win in the sense that you're going to have more people willing to acquire BTC and the more percentage of those people willing to get a yield on top of the BTC they hold. So even stacks or the entire BTC smart contract layer ecosystem capturing 2% of that entire TAM is a huge opportunity to unlock. I think what the DAT is just providing a further catalyst for this, which is to say there were many BTC DATs already this year. And by the way, if you believe in the long-term prosperity of the space, the DAT market will come back pretty strong. There will be a moment in time sooner than you're realizing everything gonna trading at 1.5 to 2 times premium again, which gonna making even more DATs gonna launch at 1 time AppNav. So trying to just hoping that you're gonna be persistently at 2 time AppNav, I don't think is the right or responsible business model. You have to really figure out a way to be able to keep the AppNav above your book value, which means that the BTC that needs to be more than just a store of value, right? How would you actually build enterprise value beyond the book value? You have to build operating business. You have to build operating cash flows. And I think it's very hard to do without having a smart contract layer.
So maybe if we kind of break it out, we have 200 Bitcoin DATs, give or take, from like Bitcoin treasuries, like Treasury for Bitcoin's public data. In that, there's like 1.4 million Bitcoin acquired kind of through these treasury codes, yet many are still trading below MNAV. Are there risk-adjusted strategies that they could arbitrage with their Bitcoin? And maybe this goes first to Muneeb, given you've been building some vault products and staking.
Yeah, so I think this was, by the way, I'm just flying back from Miami. I was at the Cantor event there, and this was literally the discussion that was happening everywhere. I had a brief chat with Kathy Wood over there, and she was talking about how they're specifically looking at ETFs for Solana that have yield, because it makes a huge difference for them if the ETF actually has underlying yield for Solana or not, because that's a huge sort of like competitive advantage over there. But I would say not even 1% of people were familiar with what is on-chain Bitcoin yield. Like everyone assumes like this is the default like sort of like market perspective that Bitcoin doesn't have yield, right? So I think the first step is actually extremely obvious. Like as soon as people realize that Bitcoin can have on-chain yield, they become extremely interested. And what Matt is mentioning is people would go to different strategies. So one of the interesting ideas that is coming up recently is that, and we have seen this happen in Ethereum with Lido and some of the other things as well, that the base level yield almost becomes like table stakes, right? So if you have integrations with underlying custodians, the same Bitcoin that, let's say you were trying to deposit, let's say you give it to a hedge fund and a hedge fund wants to deposit it at an exchange and they're running some sort of a basis trade. The same Bitcoin that's just sitting there at the exchange could be locked in consensus for, let's say, stacks and earning a 4 or 5% yield, and then it is still participating in that basis trade that you were trying to make, right? So you can actually, in some ways, like double dip. And a very interesting market is almost about to start around it. A lot of custody providers are looking into it because this is something that people understand in Solana and Ethereum, and now it's about to happen for a $2 trillion market for Bitcoin, right? So I think that's going to be super interesting.
Matt, given you've structured so many DATs and had to kind of go through the yield-basing strategies of all these DATs, what is the risk involved of so much Bitcoin now coming in on-chain? And given the events of last week of a lot of liquidations, like, are we at risk for a couple more $1 billion coming in?
Obviously, if you look at locally, the market, I would say sentiment is pretty bad.
Bearish.
But I mean, like if you're in crypto long enough, I mean, I think we have been in this moment in different ways, right? Like, I mean, like, yes, last year this time you may not have this type of events, but you had a lot of different type of headwinds from regulatory and other ways. Personally, as a founder and somebody working in the ecosystem, I had so much more the challenges coming from the price action than the challenges coming from the legislative or structural thing. I mean, like, I've been waiting for this. I mean, telling Muneeb the other day, like, I left Citi to set up Hivemind exactly 4 years ago. I felt like this year was the day zero for our business because the last 3 years almost would take a detour, right? Like, I think trying to build a business in crypto, fighting against all odds, knowing your liabilities unlimited on the downside, it's very hard to attract capital, talents, and now we're finally in that stage. So yes, coming back to your question, Rena, like if you think about the local price actions, I think there's a lot of pain in the system, which even more important for people to figure out about what is the long-term sort of like mission you are in, because I do think just like the early internet days, every single Google that ever made it, you're gonna have 999 companies that's not gonna make it. So I think this is just a very sort of normal distribution of how project and ecosystems evolves. So I think the trend is there. The trend is irreversible. BTC is already solidly part of the financial ecosystem, and that's only going to accelerate from here. There's nothing like the 11th October events ever going to stop that trend. I think for people figure out how to leverage one of the largest asset class in the world. By the way, if you really think about what's going on the macro perspective, was on the podcast 2 days ago talking about exactly the same. Like right now, we have a big problem from a macro perspective, right? U.S. dollar debasement, global inflation, geopolitical risk. All of this point towards that people really need to rethink about when you say fly to safety. What do you even mean? Is dollar still the risk-free assets? The massive rally, the pretty impressive rally for gold this year was actually a result of that. So if we go back to first principle of thinking, we believe BTC has a pretty decent chance to become the world reserve currency. It's just something worth you going building for the next decades. And then another first principle of thinking should be, if such a huge asset class out there, neutrality and decentralized and permissionless, all of that, and you have one big advantage against gold, which is actually born on chain, online. It would be such a shame not to actually unlocking it and give it abilities to be able to become a programmable settlement layer for something else. So I think if that is all true, you will see this pie become much bigger over time. And I think for people trying to not just be able to build yield on top of it, but actually building applications settles back on the Bitcoin layer using the smart contract like Stacks are building and anything else, I think it's inevitable. So I think all of that, I'm very, very bullish about. I don't think any low sort of short-term price actions would revert any of these trends.
Muneeb, Stacks has been called the missing layer of Bitcoin. What is Bitcoin missing, and how are you solving it?
Yeah, I think that's a great question. So I think Bitcoin is in this almost like unique position where a lot of the value of Bitcoin comes from the fact that it's very durable, and no one can change it. The rules are set in stone, even the design is set in stone, and Bitcoin derives a lot of value from it. Like I can dust off the software I used in 2013, like for the first time, and run it today, and it will catch up to the current block of Bitcoin, and that's just like amazing, right? And so you can have this predictability that 10 years from now, Bitcoin is going to be around, 20 years from now, 30 years from now, it's going to be same 21 million supply. This thing is here to stay. But the flip side of that is that for any sort of like technology, and you look at Ethereum, you look at Solana, you look at other things, there are new features, there are new changes that developers want to make, and they enable an on-chain economy, or they enable new features like privacy. Like if you look at Zcash, Zcash is basically just privacy added to Bitcoin. They literally took the code base of Bitcoin, they took the 21 million supply of Bitcoin, and they added stealth addresses to it. So I feel like Stacks is sort of like that missing layer of Bitcoin where we say you don't have to change the Bitcoin L1, but every feature and every application that you want to build for Bitcoin, you can do that on the layer 2. So it's almost like this missing layer that can live in harmony with Bitcoin forever. Because every time you want to add a new feature, every time you want to build something, you can build it on Stacks. And Stacks is more experimental, and it can upgrade and adapt and add new features at a much, much faster rate. And then Bitcoin doesn't need to do it anymore, right? So I think it's almost like they become sort of like a package, right? Like in the future, I can imagine that Stacks is sort of like the default rails for Bitcoin, whereas Bitcoin remains that secure store of value.
Do you think there's areas where Stacks could expand Bitcoin's utility from an on-chain economy, from DeFi products or things that you're seeing with both of you? Matt, I know you invest in a lot of DeFi projects, and your fund is actually on-chain, unlike a lot of funds.
Yeah, so I think there's this famous saying that the future is already here. It's just not widely distributed yet. There's close to $1 billion deployed on Stacks, earning Bitcoin yield, right? Around $600 million in BTC, $400 million in STX.
Where does the yield come from?
It's consensus yield, right? It's the same stuff as the base yield of Ethereum and Solana. There are two sources of yield. One is the base inflation. So Bitcoin has a very different inflation rate, right? Like Bitcoin miners go and they spend electricity, and that's how they're mining it. But in a proof of stake type layer, you have the base inflation rate, which for Ethereum, I think that's still the bulk of the yield of Ethereum. And then there's the real economic activity, which is the gas fees and the usage of the chain. Stacks is just bringing that dynamic to Bitcoin, right? Like it's a tried and tested thing, and what we enable is you can have really fast transactions in between the slow Bitcoin blocks. So Bitcoin is between 10 to 40 minutes, and you can have fast, cheap transactions with full smart contracts in between the blocks. And when a Bitcoin block comes, then you have full sort of like Bitcoin security. So again, it's the missing layer of Bitcoin. We're taking the best of proof of stake and what's working in Ethereum and Solana, and simply bringing that to Bitcoin.
I agree with that, and I think that if you think about what Stack's mission is, it should not stop at DeFi, right? But DeFi is the first stop of what it can do. It demonstrating that now you have a smart contract layer that settles back on BTC and be able to give the yield. That's the most obvious pitch for people to use Stacks who host BTC. But once you have the layer itself, you can build all sorts of applications, and more than just DeFi. Like back in 2022, some of the applications we invested in the Stack ecosystem ranges from like NFT collections and many other things. Like it's absolutely possible, but I think you have a sequencing thing. It's like what's the most visible, move the needle thing to do first, that unlocking the possibilities and the visibilities for others to build on top of this. Right now, again, I'm very optimistic that the DAT market itself will evolve, and the market gonna come back at some point pretty strong. And then all of this BTC DAT, you quoted 100 plus, Rena, gonna sit there in their boardroom asking themselves one question is that now we're holding these BTCs, what do we do with it? So I think Stacks almost have two missions. One is going there and pitching them being the smart contract layer for all the other BTC DATs. Right? I think that's just gonna get Stacks a lot more demand and usabilities, because you're basically providing a layer that all these BTC DATs are desperate for. On top of that, I'm talking to Muneeb the other day, again, not financial advice, but I think Stacks should just go there and try to do your own DAT to showcasing sort of how this concept could work, because if it works, you'll see a lot of other sort of people to follow suit. Again, that is never supposed to be a passive vehicle. If you're just gonna buy BTC and hold it, you're just better off go and do this, hold it in your own ledger, or just buy BTC ETF. BTC ETF extremely efficient, extremely cheap. There's no reason for you to buy Nasdaq companies and with all the extra costs. It needs to make you do things beyond just simply holding BTCs. So
I think the market sentiment right now is quite bearish. Let's fast forward 25 years from now. What would have DAT solved and give the group some optimism?
Yeah, so maybe a little bit comment on the Bitcoin market and the Bitcoin price, right? So I know everyone has their own views. My view on this is that Bitcoin is going through almost like a quote unquote IPO moment. The way to think about this is there are a lot of early Bitcoin holders, right? So when I started in Bitcoin, it was like around $70, right? So imagine being an early person who came into Bitcoin when it was like $20, $70, even $100, and you've been a believer for 12 plus years, and there's finally enough liquidity in the market where you can exit some of your positions without hurting the price of Bitcoin, right? And a lot of these OGs in my circles, I think I can just say from purely anecdotal point of view that there are people who are taking some money off the table, right? And they're doing it in a very careful way. They would actually, and $100,000 was also like a big mental price range that a lot of the early people had. And they would likely not, if you have held Bitcoin for 12 years, 13 years, you're not going to sell if it dips to like 90,000 or 80,000. You'll hold it a little bit longer. So that's why we're seeing a range between like 104 to 107 or so, where this starts slowly selling. And there's a lot of institutional bid, which is actually a good thing, right? There's a change of guard happening. There is sort of like a redistribution of Bitcoin that's happening, and some of this capital that is now getting converted out of Bitcoin can actually be plowed back into next generation projects, because these people are fundamentally different. They're early stage, sort of like they get their excitement out of more early stage projects, and of course they still remain Bitcoin believers and whatnot. So I do think Bitcoin is having this sort of like this IPO moment, which is actually pretty healthy for the market long term. Even if you look at like Google stock, Amazon stock, after the IPO, there was a period of sort of like this early people taking some money off the table, and other institutions and late stage investors coming in and building positions, right? So once this happens, and in Bitcoin, I think everything happens a bit faster than normal tech stock. So we might actually start seeing the tail end of this. I don't think the selling is fully done yet, but I also think it's not like a lot of it is left either.
I don't know what's going to happen in 25 years. I don't even know what happens on December 31st this year, to be honest. I mean, we're in a market and in industry where it's not normal distribution about prediction, right? I also think humans have the tendency to always overestimating things in the short run and massively underestimating things in the long run. If you think about NVIDIA, right, 10 years ago, forget about 25 years ago, think about 10 years ago, it's just a GPU for gamers. That's really, like, if you talk about NVIDIA as a company, that's the only used application. Who would think today the largest market cap companies, basically the monopoly for entire AI infrastructure? So I think BTCs are going through the same transition period. You know, I wouldn't know whether you actually trade at $1 million in 25 years or maybe in 5 years. But I'm just saying is like you have to, again, hold some first principle of thinking. I think the question you're asking is this permissionless based, decentralized based of consensus to be able to build a unified financial ecosystem across the globe, just like how internet agreed on TCP/IP protocol. Is this something we think eventually is going to happen? If you think that's going to happen, I think everything else is a bit irrelevant, right? Because I think that itself will push BTC to a significant amount of price point that I think are beyond our imagination. Now, who's going to build a killer app? Who's going to become a very big unicorn in that evolution? I think that is a more interesting question, right? So I think that's why for Stacks, for everybody else, we're all trying to figure out in that ecosystem. But I think the North Star is, I think this on-chain migration, just like last 25 years, when you have the online migration, it is inevitable, is big, is the trend. I think programmable money as the only settlement layer for AI agents is such a huge narrative, and all of this making this super exciting. And if you that, in that sense, I think in 25 years, I don't know what it's going to look like, but I tend to believe that the future is pretty bright. So,
With that, we're just at time. Any closing remarks? It seems from the way you guys are communicating that DATs cannot be passive. They must be active in kind of on-chain economies. They should be in DeFi. They should be in staking. Maybe CeFi is like their gateway through. But is there anything else that's missing from like the DAT eco?
No, I think DATs are basically making us enter a new era for Bitcoin, right? Like just like ETFs was a very big deal, but ETFs are passive vehicles, and I think these active vehicles for Bitcoin are actually just gonna change what Bitcoin looks like, and I'm really excited about that phase.
I agree. I think you know, I don't know how many people here for the educational purposes, but if people are actively looking, investing in that, sponsoring a that, servicing a that, I actually think now is the great timing. You know, you got everything in your favor that you dreamed of 6 months ago. You would get things below MNAV. You know, you would have the project willing to talk to you. It's great timing to launch. Token price are low too. So if I one of the participants, I would absolutely want to be able to start something in this space. Again, the DAT 1.0 is going to be very different than the DAT 2.0 and 3.0. I believe in 3 to 5 years, every single Fortune 500 companies is going to be a DAT. Just because their treasuries were holding US dollars and euros and pounds and yen like in the past, every company would probably want to hold some of them in BTC. So the difference is that they're going to have an operating business on top of that, which I think is where that's going to evolve anyway, right? If that's the case, I think if you're solving a smart contract layer for that treasury, for BTC, I think it's a huge TAM. So again, very optimistic about it.
Gentlemen, thank you.
Thank you
very
so
much.
much.